thank you everybody for being here, taking the time out to demystify the digital assets and tokenization along with our esteemed panel. I'm Ruchi. I head the financial services market for Zulke in Asia. And just like you, I'm also intrigued by this industry of digital assets and tokenization, which was $7 billion USD in 2022 and expected to grow to $164 billion by 2029. So we thought, let's explore it more. And we are fortunate today to have such a diverse panel with us, consisting of academia, blockchain association, a platform provider, a digital exchange, as well as a financial institution to share their thoughts around digital asset tokenization. So without further ado, I would invite the panel to introduce themselves. We'll start with Johnny.
Good afternoon all. It's great to be here. My name is Johnny Wijaya. So I head up the innovation for Bank of New York Mellon in the regions. So what it means is really looking for opportunities and applying new ways of working, emerging technologies to solve for our client needs, from automations, core digitizations to reimaginations on how we do business today with the client, as well as creation of a new product and capabilities such as digital assets. So Bank of New York Mellon's not the typical bank that you could imagine as you walk on the street. So we don't run ATM machines and anything like that. We're actually the US oldest bank, 240 years. 35 countries, 40% of our revenue come from internal sources. So we touch about 20% of the world investable assets. We have more than 1 trillion of liquidity in the balances. We clear 10 trillions of securities on the average day. We process 2.5 trillion of payment. The reason why I'm highlighting all these numbers, the business is very broad. Although we are well known as a global custodian, we are a lot much more than that. So it's great to share our journey on digital assets with the audience today.
Hi, I'm Neil Thomas from Asia Next, and my stats are a lot less impressive than Johnny's. We're about 1.5 years old, and we're in a startup, but we are going live actually next month. We're a digital asset exchange. Prior to that, I was with the Swiss Stock Exchange for 15 years. Started a joint venture. I think it's the people in the room actually responsible for this. Started a joint venture with SBI Digital Asset Holdings back in 2021 to create a regulated digital asset venue in Singapore, which is going to be trading with crypto, so crypto derivatives, crypto spot trading. Also doing digital securities, so looking at existing securities but putting them to digital form. And then also on the sustainability agenda, we have a stream which is focusing on the carbon markets, particularly trading in REX. So nice to be here.
Everyone, I'm Ernie. So I'm co-founder of Didoco, and that is a blockchain-based platform that does business process and not tokens. Right, so now why am I here? Because I represent the academia part and the blockchain association part as well. So I teach in NUS and I do fintech and blockchain courses in NUS, as well as I'm currently vice chairman of the Blockchain Association of Singapore. I've been in the kind of blockchain space as an academic from 2014. I have been observing different things that have been happening across the space in terms of the digital asset tokenization as well. Was kind of involved in it a little bit when I spent 2 years in IBM's blockchain research lab as well. But I would say I'm really more of an observer in terms of the digital asset space, and happy to share my thoughts here today as well.
Hi, good evening, and sorry I sound like this. I'm just recovering from a cold. First off, a big thank you to Zulke for inviting MarketNode and myself over here. For those of you that don't know MarketNode, I do see a lot of familiar faces. We're a joint venture between Singapore Exchange Group, which is right behind you, and Temasek. Really what we are is a digital asset infrastructure operator. Our vision is how do we give issuers and fund managers and asset owners the ability to issue assets on chain. We think it's a marathon, not a sprint, and we think there's enough inefficiencies in the market today that the technology needs to solve before we go fully native digital. So a lot to share with you today. I'm really looking forward to it. A bit of background on myself. I consider myself an accidental entrepreneur. I've been at Singapore Exchange for close to 10 years. I'm the co-founder for MarketNode alongside 4 other members, and really had to learn a lot of what the technology does in the hard way, which is how do you commercialize it. So thank you again for inviting me over.
Thank you to the panel once again for joining us today. Maybe we'll just break the ice a little bit, and we'll start off with a small quiz. We are technologists, so we love quizzes. So maybe we ask all of you to join the Slido and help us to answer this question. For those who are finding it difficult to read, the question is, digital assets to you are. So I still see that there is a white percentage which says blockchain, digital assets are nothing but crypto, NFTs, CBDCs, whereas I think a lot of people have also said that this is something which is transferred using digital ledger or blockchain technology. So maybe I'll pass the question back to the panel and ask you, what really are digital assets, tokenization, and how does they fit in the wider landscape of blockchain? We can start with Ernie.
If you really just look at the two words digital assets, right, it doesn't really say much, right? And it could mean any kind of asset in a digital form, but the assets we get in digital form today are not truly digital, right? Because a lot of the back-end process are not, right? So they are carried over from a lot of legacy processes, right? Your stock exchanges, whatnot, right? So a lot of the back-end processes are still very much paper-based or very manual, right? And therefore you do not get a native digital asset in that sense. And why blockchain comes into the picture is really the word trust, right? So we can build like full systems that manages digital assets, right? That has like a database, everything fully digital. But if it's centrally run, then there's always like a lack of trust in a way, or there's a huge dependency on that one party that's running that platform, right? So and that's why blockchain always seems to come into the picture when we talk about digital assets these days, right? And really it's about how to fully digitize our entire lives, right? And this is what is driving the adoption of digital assets.
In simple terms, I guess digital assets describes a lot of different things to a lot of different people. I think there's a big education piece that has to follow if you're getting to this space. For most people, I guess cryptocurrency is the first place they land, right? And that's had, for anybody who's working in that space, has been on part of the roller coaster for the last six months. The underlying technology which drives it is blockchain, right? And actually has not been at fault for the last 6 months. So I mean, cryptocurrency had a bit of a bad, to say the least, run. But if you look at blockchain technology which drives it, actually it's been faultless in that past. And actually it's been a real help to a lot of people where you can see, as on a trust-based system, where assets are moving around. And then you look at distributed ledgers as well as blockchains and how people are operating on these to see if there's efficiencies with current assets. And then obviously you move into the space of Web 3.0 and NFTs, how people are trying to tokenize and fragment that market. So there's lots of different applications, but I think what most importantly, I think it's important to say, well, what's the underlying value? Does blockchain and digital asset actually achieve the outcome that you want? And actually, in many cases, it can be very, very powerful and very, very useful. But that's not exclusively the case, right? But I believe the digital asset is a very important part of the future of financial services. I'm a big a believer in that. But it's very broad what that means to people, and you can't just paint digital assets for a whole basically way that the market may work going forward.
Yeah, I think if I add, I think a lot has been covered, right? So it's a lot more than just crypto, that's for sure. Crypto is just a small subset of digital assets. But I guess another way to look at it is also kind of like think about internet of value, right? The fact that we have progressed so much in the industry today, since everybody have their browser and internet, it's almost like a superhighway that information available anytime, 24/7, always on, almost like we are taking it for granted. Could I imagine one day when internet goes down, how we feel about it? But think about anything can be wrapped around as a value and they can be moved around just like the speed of internet. I think that is what is super exciting. We all talk about digital representations of anything of value. And once you create a token, is something that, first thing, of course, is clear who owns the stuff, right? and stuff that essentially we can move around really, really fast. And again, there's a lot of business model can be built on top of that, right? And again, this is like trying to super simplify this thing, but then again, we can talk more about in financial services, what are some of the early sort of business model, or what are we solving? What are the immediate problem statement that some of us here, all of us here, are trying to solve?
It's true. But if I look at it from an ownership of asset perspective, and I look at it from somebody who's like an asset owner, what benefits does it really bring to me apart from a T+0 settlement? Is there more to it that the digital assets can do?
T+0, it means a lot to the asset owner, right? Well, think about the likes of asset owner who hold on to a huge amount of assets. Today, they have a trapped liquidity because of the T+2. There's so much more they can earn from the assets if it can be settled on time, right? But let's take a step back for about asset owner, right? Yeah, for us at BNY Mellon, we serve asset throughout the whole life cycle of the assets, right? From the issuance, somebody want to issue, we have a role to play there. To asset actually get deployed and people start trading it, executing it, and you want to hold it. We are the custodian, we are safekeeping that, right? Or some asset managers, some people who just want to rely on somebody who is smarter than them to actually invest. Instead of them go and buying the individual securities, and then you rely on the asset managers who actually create a bucket of all those different products. And somebody need to do a valuation of those products on the regular basis. Again, we have a role to play there. And again, you're holding on to the assets, you certainly want to make a better use of that assets that you have, right? This is where the liquidity conversations coming in, right? So can you pledge it as collateral? Can you lend it? And so on and so forth, right? So this is where there's a huge amount of opportunity with digital assets beyond the lens of the asset owner, right? From an issuance perspective itself, right? I mean, if you speak with all of us here, just to issue a bonds, we could tell you how much of manual step involved, how much of discussions, how much of papers getting exchanged is painful. But just think about, if we could digitize that process itself, right? When we create a token that represents the assets and all the economics of the assets can actually be tokenized along with the assets, right? Things are just much simpler. But what we see today here is there's still a lot of papers moving around, although like I think Anissa started it, although we feel like we are digital today, but there's still a lot of processes behind it that's pretty manual. And then as a workaround, because of AI, computer visions, we start building all these OCR solutions. Don't get me wrong, it's good, right? But does it solve the underlying problem? That is a symptoms, right? So just from an issuance perspective, if we can actually, program the economics of the asset itself at the point of issuance, they actually create a lot of efficiencies for everybody down the stream, right? And also you can lower the issuance cost as well if you think about it in the longer run, right? Then when you talk about, execution, trading, I mean, Rehan talked about T+2, these are some of the stuff whereby, it creates settlement risk in nature, right? Because I sell something to Neil, it's only gonna have that settlement finality after 2 days. Anything can go wrong within these 2 days. And as a result of anything can go wrong in these 2 days, then you need more margin requirements. You need to post a collateral. So it's become very expensive in the process, if you think about it, right? So even for a service provider like us, we don't advise people what to buy and stuff like that, but we play a role because we are the rails of how things are going. That's why we touched on that 20% of the world investable asset is super painful as well from a service provider perspective. I need to get your broker statement. You need to send me your copy. The party who actually trading, the party who play custodian, go on and on, right? We need to reconcile all the time. It's very painful, right? So now let's talk about, distributions. There are certain type of assets can only accessible to a certain type of investor today, just because they're expensive or the asset the size is big. Just think about how we can be fractionalized to make it more accessible. Or think about any type of assets today that potentially can be tokenized, because today there's just not enough, they're just not liquid enough, right? Yeah, so we can go on. And then the last thing, I just want to talk about the liquidity part itself, right? Just think about if things can be settled T+0, 24/7, there is just so much liquidity can be untrapped and so much efficiencies, right? So it's much more than just the asset owners, it's actually covering the whole thing. But here's the challenge, right? So, because just like how the world is so interconnected, we need time to sort of like upgrade this. It's almost like we are upgrading the whole industry tech stack, if you may, right? So just, I mean, sometimes I like to use a parallel. I don't know whether it's a good example or not. Like you got trains connecting. Let me use the example of India, for example. India, the whole country is connected by train. Fantastic. I can go wherever I want to go. But then I'll start building bullet train. But look, one station of bullet train doesn't mean anything. You got another bullet train. You got another bullet train, right? At some point, you got to go with a traditional rail to the, yeah. So there's a lot of benefits to the whole ecosystem, but the challenge is as what Rehan mentioned, this is a marathon, this is not a sprint. And to do that, I think we need to do it in a way that is sustainable, but we can talk more about it.
Add a bit to that, right? So from an academic point of view, I think this is very exciting, but it can also be very scary at the same time, right? Because you're not just now providing technology, you're embedding economics into the technology. And that is something that can have a lot of unexpected consequences, right? Because fundamentally humans are humans, right? And they behave in various different ways. And it's very hard to kind of anticipate how they will behave. So I think it is very exciting space to watch in the sense of not just kind of improving on the efficiencies of these digital assets, and not just creating more accessibility to the developed world, but really how you can innovate on these economics and these token designs, digital asset designs, and come up with totally new ways of doing things, right? Because a farmer somewhere in the rural area is not going to understand like buying a bond or things like that, right? But it could be products that fit them much better in terms of some kind of agriculture, something with some kind of agricultural link, for example, right? Or how it could be linked to their livestock or their produce, right? So there's a lot of opportunities for that we can see can emerge, but it also requires a lot of innovation. So like beyond like T+0, right? It's really what kind of innovation can we eventually get out of that kind of reaches everybody and be really inclusive, and not just inclusive in the developed world in terms of fractionalizing assets such that lower income people can get access to that, but inclusiveness globally and reaching to these different types of demographics that currently we don't reach anyway as well.
That's so true. That brings me to my next question to Neil. So what does it really mean when we talk about digital asset tokenization in terms of the security and transparency for the traditional assets? How does that change?
So I guess if you look at, from a security perspective or transparency, I guess you got to look at it from the perspective of if I'm issuing an asset in a digital form rather than a traditional form, what's the benefits to me, right? I think a lot of those areas, looking at purely there's different things, but let's take it from a security perspective. You've got decentralized exchanges and you've got centralized exchanges, right? So I operate a centralized exchange. So, everything comes to the center. And I think with the financial markets right now, that's what's required from a security perspective. A center of trust where and anybody in the room, obviously, of FTX probably rolling their eyes right now. But I guess you've got to look at it from an institutional and TradFi background, right? So how do you make sure that you build trust into the process when you're operating an exchange which handles digital assets or cryptocurrency? I think then it's not necessarily about digital assets. It's really about making sure you've got processes in place where people are taken largely out of that process, or governance, old-fashioned governance, risk and compliance kind of lens to that. So from a security perspective, of how do we make sure that the assets are in a trust basis. We look at really first principles of what does good look like from an exchange perspective. So simple things like segregation of client funds, right? So your money does not sit on the exchange, it sits within your bank account, and then if you want to make a transaction, you do it. The custody of that asset also does not sit directly on an exchange for certain products. And if it does sit on that exchange, have you got access to it, right? And when you need to, and if the market's going to move. And a blockchain can really help you in that respect, because you've got a view on what is within your node or that sits within your portfolio. So I think from that perspective, central exchanges are the first step, right? Because people know, okay, I know that venue, I have a counterparty, I have accountability with that person. If something goes wrong, I know who to ring, right? The DeFi world or decentralized exchanges, though liquidity is flowing really around these platforms, the likes of Uniswap, SushiSwap, people have probably heard of that, and there's a new one called Level as well. The current, from a financial services perspective, you're coming from a TradFi perspective, it's back to KYC, AML, source of where is my funds coming from. I think there is a real security unknown there, that they just can't get involved in the DeFi world right now in a meaningful way, because they need to know where is the asset, who's buying it, who's selling it, and moving around. So I think from a security perspective, I'm coming from a centralized exchange, so I'm going to say that. But centralized exchanges basically are bridging a gap right now, right? I think it's these iterative steps that the market, I think we've all alluded to, moving towards. Digital securities from a transparency perspective, I guess they do support where you can have a much more, a much closer view on what that asset looks like. So there's a lot of things that happen on a manual process, for example, within traditional securities. Now we talk about the multiple steps for bond issuance, the multiple steps or structured product issuance that you go through. How do you make sure that that's being handled? And by using digital technology, the smart contract, right? You can program a lot of these things into it in advance, and you take human error out of it. So anything that may impact that life cycle of that security, a corporate action, whatever it might be, dividend payment, etc. You can build that into a smart contract, which then takes human error. So I think that is a really useful part of bringing some clarity and transparency into the market. I hope that answers your question.
That brings me to another question, which is around governance. So what does it mean from governance perspective?
Yeah, from a governance perspective, I guess, you've got to be scrutinized, right? So being regulated, right, is number one, right? So are you sitting in a market where the regulator is respected, number one, right? Not all regulation is equal. I think that's really important to say, that just because you say I'm regulated, okay, but who and where is probably the first thing that most banks or large financial institutions will ask you. Then you've got to make sure that from a governance perspective that your organization really is open and transparent. So are you operating on a central limit order book? How are you making sure that the people can view what's going on in your exchange, right? So you can see orders coming in, it's transparent. You can make sure that your positions are clear. And I think from a governance perspective, you've got to do internal governance. You've got to have, if you look at someone like FTX who failed, right? They didn't have a board of directors, for example, right? So first thing you look at, do you have a board, right? Who's you might be regulated, but who's got that scrutiny of your organization? So governance is very, very important for my world.
Yeah, maybe my add is that regardless of digital asset or traditional assets, at the end of the day, when we talk about trust, you actually boil down to the same basic tenets, right? So you have to be that client asset protections, basic regardless, right? Second thing is there have to be an order of the market. The market have to function in orderly. And the thing, there need to be a the regulation clarity. So I think whatever the model is, I think these are the three things that are super important so that we all feel safe and trust whatever the model is going to be, right? Whether it's CeFi, DeFi, hybrid, traditional digital assets. I think it's the same basic tenets.
My next question is around adoption, and how do you see financial institutions adopting tokenization, and some of success stories if you can share with the audience today?
So great question and a very long answer. So, this is going to sound a little contrarian, but I think the act of tokenization now is not that great a differentiator. I think it's a symptom of where we are right now, right? There's many different tokenization platforms. There's many different exchanges. You look at the CEXs, you look at the DEXs, and frankly, when you speak to issuers, they're generally confused in the market as to who does what. So simply saying that I will create a tokenization engine that launches your token into a DeFi network doesn't really move the needle anymore. And if you go back to what Johnny was mentioning earlier, we've done a lot of research in what really constitutes, for example, bond issuance, right? And depending on the complexity of the bond, it can take anywhere from 680 to 2,000 steps. Simply going to a large corporate issuer in Asia and saying, I've got a great tokenization engine, your question is always going to be, what about my 680 steps? Do you know it takes me 8 to 12 weeks to get a bond document done? I'll give you another example. When you look at fund settlement in Singapore today, right? Our critical market infrastructure is a fax machine and the Excel, right? So I think one of the risks that I see is the fact that tokenization will solve these issues, right? Before it goes and actually opens up the uninvestable asset classes. I think we really have to focus on solving the problems today. That's been our focus, and the way I claim our motto is it's very much digitize before digitalize. And I'll give you two good examples over here. We've been working with the MAS, I think there's one or two people from the MAS here today, on really studying the Singapore fund market infrastructure very deeply. And Ernie's not going to like what I'm going to say, but most markets in Asia actually operate centralized fund settlement infrastructures. And that allows for T+0 settlement, which means all of us in the room can click a button on our wealth platforms and buy a mutual fund. In Singapore, the settlement cycle will shock you. I won't state it in public. It will shock you, right? And to me, the adoption really comes from solving what is the burning need for the client today. What is the burning need, for example, for the regulator? What is the burning need for anyone who sells funds today? And you almost have to add in tokenization on the back of that as future-proof infrastructure or to prepare yourself for new business models that I spoke about, right? So what we call FundNode, which is a platform that MarketNode operates, fingers crossed it'll be live July of this year. We're working extremely hard on it. It's a great example of that, right? There's a lot of experiments going on in fund tokenization, but can they please start by solving a problem in our market today? Secondly, when you look at bonds, again, it seems like everyone's got a digital bond platform nowadays, right? Until you go and speak to the issuer, and again, they say, look, I spend close to $1 million in my document preparation. Can you please solve that before you give me a digital bond? So again, I think the adoption comes today on where we are, from focusing on day-to-day needs, digitization, building a resilient business case, building that stickiness, and that will not come through a shiny tokenization platform, unfortunately, right? As much as I'd like to believe it. So yeah, that's just giving you a bit of a view from the ground as to what it's like to cover a large issuer, a large fund manager. What do they face today? And interestingly found when you listen to the market as to what they really want, the adoption problem becomes less of an adoption issue and more of a solutioning issue.
So we speak with 271 institutional investors. There remains to have a significant interest. Obviously, this is before FTX, right? A little bit dated, but it's not too far away in that sense, right? 72% think that it's important to have a fully integrated provider for custody and execution because they feel like the industry is moving too fast and it's very fragmented now. Super important. 88% feel like they're comfortable with digital representation of cash. So they start feeling comfortable. Yeah, it's okay, tokenizing the cash. They feel good about it, it's fine. 88% say that they are planning to move forward with the current plan despite the market downturn, right? So I thought this is just to give a bit of perspective, as I'm sure all of us continue to speak with our clients, but it's a bit dated, this after the Terra Luna event, we haven't done yet after the FTX, but just to give you a perspective.
So that effectively means there is a drive for adoption. But what I'm really interested to ask on behalf of the audience is, do you have a success story which says, yes, this is where with digital assets and tokenization, we've really got really great success, and it's a great call out.
I think if we're talking about broader digital assets, and we need to mention the C word, right? Crypto, because the crypto market actually, it went from just under 3 trillion in asset trading on spot down to just under 1 trillion, but actually it's really bouncing back. Right. So, I mean, it's not, I wouldn't say a massive bounce back, but it's recovering is a better way to put it. And I think, Singapore has been quite innovative and a leader. It's in the field of blockchain, right, and driving that. So obviously you had Project Ubin, which was really driving the adoption of blockchain technology prior to that. And now it's moving also now under Project Dunbar into the world of CBDC. So here there was a Project Guardian. I don't know if everyone's aware of Project Guardian, which was part of my broader organization. I think it was announced at the Singapore FinTech Festival last year, which is basically working on Sing dollar to Japanese yen, digital transformation of the currency. And now the next leg is happening out of Singapore as well, hopefully with the Swiss franc to be confirmed. And then also looking at an asset as well. So I think, you look at what's come out of the success of the crypto space, and I think a lot of organizations have benefited from that initially, and because of the MAS and the PSA license did offer a venue where it's saying, look, we want to drive standards about what good looks like here. Okay, and fingers have been burnt, don't get me wrong, but I think maintaining that course of driving what institutional adoption of digital assets, or just providing what the standards need to be for the industry, is really important. I do think Singapore is very, very strong in that field. Hong Kong, now everybody's aware, like really bouncing out of COVID with full velocity into crypto, particularly looking at the retail market, where in Singapore that kind of they shy away from that for various reasons. But when it comes to institutional adoption, they understand that the benefits of blockchain, that crypto drove, right? I mean, it really came from that market initially, and crypto is a 10-year industry at least now, so it's not nascent in any form. So I do feel that what's happening in the crypto space here maintains. Institutional adoption is happening here. You'll see more of it. I think most people are doing it very quietly. You saw a big announcement last month from Fidelity that they opened up crypto for 34 million. This is in the US, 34 million clients to trade crypto. Now, okay, it wasn't a big fanfare about it, but the asset class is widely adopted. And I think this is happening also here in Asia, right? So these global firms are opening up, and the Asia market recently for Ethereum adoption overtook US, right? So the rate of acceleration in Asia, where more than half the world lives, is now starting to overshoot that of the US. I mean, as in adoption. So I think Singapore and the wider Asia region is really driving this space now.
But we continue to take a very conservative approach. I mean, we heard the statement, no to crypto speculation and yes to digital asset tokenization just a few months back. So I really feel that we still have a very conservative, well-governed, something which is sustainable approach, I would say, towards this. And what's your thoughts on that, Rehan?
So there's one success story that I will talk about a bit later. But when I think about Singapore, right, so I've been here close to 13 years right now. And not just because I work in financial market infrastructure, to me, it's a great place, a place that has great infrastructure, period, right? So if I think about the fixed income world, right, what is really Singapore's pitch to any issuer sitting globally? Come to Singapore, list your bond, it's done in 24 hours. Fastest turnaround globally, period, right? When you think about Singapore as a foreign exchange hub, right, think about the proliferation of FX matching venues over here, whether it's banks or whether it's by the SGX group. I think Singapore overall has done a phenomenal job of setting the right infrastructure. And you mentioned earlier the note about yes to innovation, no to speculation. I would actually double click on something else on the regulator, which is what they call the ITM 2025, Industry Transformation Map 2025. And what I love about Singapore is that they give you great guidance, right? It's actually unlike what the Fed does from time to time. They give you great guidance on what are the key infrastructure investment areas for them. And very conveniently for MarketNode, it is improve bonds infrastructure, improve funds infrastructure. And this is actually the underlying current that I see, right? It is one thing to say, let's innovate, but it's a very different thing to say, how do we build a national level infrastructure? And it doesn't just need to be one player, right? It can be a MarketNode, it could be an AsiaNext, it doesn't really matter. To actually support an issuer, an asset owner that wants to come in here and issue a variety of assets. Again, I was alluding to Ernie and his views on decentralization. I actually think centralization is important, but probably for different reasons than Neil, right? I think it's important because the scale of asset servicing, there's parts of it that just don't make sense for a single player, right? And I can name many of the things that I've seen at depositories over the years. So to me, from a consolidation of, for example, for KYC, setting up of accounts, dividend payments for exchanges, there is some benefit to scale, right? For us to use the DeFi technology stack is one thing, but we just find there's greater efficiencies for the overall market. So again, just coming back to your question, we take heart from what was said, but we also see that as a key driver to ensure that Singapore builds the right collection of national infrastructure to future-proof itself as well.
So that's really positive, but I would like to make it a little darker and ask you a little bit about the challenges. So you've been creating the platform, and what were the challenges and what are the typical challenges which the platform providers, say for instance, face?
We end at 7:30, you said? Okay. What are the challenges? Okay, there's many. If I think about my top three, right? One is actually attracting the right talent as a startup. I think for a large bank, I'm very envious of Johnny's talent pool and same with Neil's talent pool. But actually as a startup, even if you're a corporate-backed venture, to find the right talent is extremely difficult, right? You have to find the talent who has been at a financial institution for many, many years, but they are just fed up enough to want to take the leap to you, right? And this is even rarer than the unicorn. So that would be one thing. Second is, when I was at university, I never thought to myself, I always wanted to be at a bank. I wanted to trade big denominations of bonds, right? But now infrastructure is sexy, right? Generally in Singapore, I find that in Hong Kong, I think that mind shift is a little bit tricky for people to come across, right? How do you move from a principal role, an agent role, to actually moving into, what is plumbing? I love plumbing. I think it's great, but it's a different role. So I think there's something to be said about the mindset, right? I think the third challenge I would have is, I think the market is not very forgiving of new initiatives, right? I think there's a lot of support overall. There's a lot of championing, but I think just given the speed of innovation in the market, people are very quick to dismiss and they're very quick to champion, right? So what I mean by that is this is not like developing the original iPod where you can go up to iPod 14, right? You have one shot, right? And guess what? If you have something wrong, something does not work in the first sight, the network of people involved in this market is small enough that everyone is going to know. So I would say the margin for error, maybe that's a better way to put it, is a very different margin for error right now.
From my perspective, I guess if I wear the hat of my former employer on SDX, the Six Digital Exchange has been one of the first adopters, right? It was regulated by FINMA, and they've issued quite a lot of money and spent quite a lot of time, and they've issued obviously digital bonds, so fully regulated digital bonds onto the blockchain, onto SDX. Now there is no liquidity right now, right? Because there's only 7 bonds on that, so trading in and out of them is very, very limited. What you need really is mass market adoption, right? So you need people to come to the market, and that's a challenge, right? You've got to come together to have the volume of assets and the volume of players on there that really going to drive liquidity in that space. So you get the benefits of things like the tokenization and fractionalization, if that is a benefit. So I think it's really about one of the biggest challenges that you face is getting the existing rails moved over to digital rails, and there are ways of doing that, right? So how do you issue in a traditional form and then end up in digital is quite a clever. I mean, it's not speeding up the process, right? But it's getting people one step closer to creating more digital bonds, which then can be traded. And linking CSDs in the traditional form with digital CSDs is one way of doing that. SIX have the benefit that they run the Swiss CSD, so they can really do that. So I think that's one of the biggest challenges, is getting this move over in step by step so that you create a critical mass. And the market needs to be there really for this to really, to play, and then all the use cases which hang off that then will happen. But liquidity, I think, is one of the critical functions that are going to need to really drive digital asset marketing.
That brings me to my next question, making it even darker. What are risks? So we've talked about all positives, great things, but being responsible for this ecosystem, I think it's also important for us to look at the risks which are associated, and risks not only for just the investors, but also for issuers, for intermediaries. What are the things which they should be aware of?
Well, this is where you need regulations, right? In the first place. Again, going back to that basic tenets, right? There need to be customer asset protections. There need to be a standard good practice, segregation of assets, your compliance and all those kind of, margin requirements and not overexposing. There's just tons of stuff that anyway we are doing in traditional assets. So it doesn't mean that digital asset means that you can bypass all those things that remain the same, right? So that's where kind of going back to that basic tenets I mentioned about, customers protections, orderly markets, and clear regulation.
Thanks for that, Johnny. It's a great starting point indeed. Neil earlier had mentioned Project Guardian. I do urge you to look at Project Guardian in a lot more detail, because the idea over there is for this technology to be tested within a sandbox, right? In which the risks are made quite clear, the use cases are made quite clear, and it starts off with institutional participants. So MarketNode is actually one of the first members of Project Guardian. And as Neil mentioned, there's a lot of initiatives underway. Watch the space. So that's risks and how a very forward-looking regulator like MAS looks at it. But I will move to some other parts of the risk spectrum, right? Interestingly, we see when you look at large permissionless blockchains, right? When you think about the intranet to begin with, let me take a step back. It started off with the intranet and it moved to the internet. Interestingly, what we're seeing in the permissionless blockchain spaces, it started off as the internet, but now it's turning into a sub-debt model. I think that's really good, right? I think it gives a lot of the financial institutions that are sitting here the right, I don't want to misuse the term sandbox, but a more comfortable place to play, right? The biggest risk that I find, again, as an operator, maybe not wearing the investor or the asset owner hat, is the risk of the obsolescence of technology, right? When Neil's old employer and my old employer think about the system change, they look at what's going to last them for 15 years. That's the amortization cycle they plan for. I find myself planning for 9 to 12 months at best now, right? And that's a risk that, as a practitioner, it's a risk you don't hear about, but it really has to figure into our unit cost economics of providing the product, right? What if the chain is not developed on enough? What if I have to shift? What if some vulnerability has been found? So I think there's one thing to tell the outside world about what risks they face, but we are trying to figure out the blind spots within the technology ourselves. I'll wrap it up by saying, please do take a look at Project Guardian. For me, it's a great one. There's the EU DLT pilot regime, for example, that's just started in the EU a few weeks ago. But as a sandbox for participants to play in and be quite open about the risks and challenges they face, I think it's a very forward-looking model.
I think from the perspective of an investor, another risk that I see is too much trust, right? Because the technology is going to be so good that when I open up the app, I can buy a fraction of a bond. Right? So I'm gonna trust in whoever who provides me with this app to buy such stuff. That's the same story we saw with FTX. Right? People just trust FTX because they think that it's a big exchange. They have so much money, nothing's gonna go wrong. So too much trust is a risk to the investor. Right? And everyday people are not gonna care what is the regulation behind it? Have things been checked properly? They're just, hey, I can download it on my phone, I can buy stuff, then I'll do it. I guess it's in the hands of the regulators now to figure out how to put in the right controls and make sure everything goes properly.
I think with that, I would like to open it up to the audience questions.
mean, I met one of your colleagues earlier, and I totally agree on that. Singapore needs a little bit of improvement on that. But actually, when I look at the report by PwC that's in 2021, there's about probably only 5% of the global assets that has been digitalized. And many of those actually are just not in financial form at all. But we do have a lot more, which we think real estate, for example, and the heritage and the culture, a lot of things. Financial representation, I think, is one form of the real world assets, whether it's ownership or it's a debt liability towards a company that is running that or owning that. But it's ultimately the asset itself, which is giving whatever the consumers or someone who is using that. So on that part, I don't know, how do you see where we are going, or what's the landscape so far? So that's my question.
Yeah, so no, great point. Obviously, a lot of assets, obviously financial securities is one thing, but the physical assets out there that are currently not able to be traded on. There's huge projects ongoing, right? Huge initiatives in this world that are really driving that space. So from the big stuff, right? Like looking at the real estate markets, for example, how do you tokenize the world's real estate? Can you put it on a blockchain? Can you fractionalize it? Can you open it up to a much broader investor? Can I create capital against these fixed assets? And that is obviously ongoing. Actually, on AsianX, we're working with one of our family who are doing issuance in the on basically they're tokenizing the financial returns of not actually the buildings themselves, but the financial earnings from those buildings. So like the rents that they might come through. So those use cases are there, and looking at how can you create tokenization or digital asset form of that. So we're working on that space. We have a lot of issuers, but the whole process is, has a lot of, it's not as straightforward as I'm going to issue that on a blockchain and everybody can buy it, right? Because there's the existing construct about, physical deeds of buildings, for example. What happens to them? How's the registry of that? How do I make sure the asset is custodized and securitized properly, right? So if I put my building up, what if someone decides to kind of take the top 2 floors off, right? Then what happens to my asset, or changes it or paints it bright pink? But all those sort of questions. But you're completely right. The digital asset or digitalization of assets will really help that market. I mean, the Sygnum Bank, I think I don't say here from Sygnum. So last year they tokenized a Picasso painting. And it's a really exciting space, right? Because you can build portfolios against all these different assets that you never before could get your hands on. So I know a company, guys that have come out of UBS and out of Six, who are working on investment funds of art, right? So they're saying, it's called ArtX, by the way, have a look if you want. But they're basically saying, well, you can create a portfolio. So if I want to create a portfolio in 20th century Brit art, I can buy assets in there because I think it's going to I'll create a fund and then I think it'll go up, right? So that I completely agree, and we have a view on that. It will come. I think there's going to be a big market for that. But there's the sheer size of that, right? I think financial services will drive that innovation through the securities first, and then it will come. That's my opinion. Feel free to disagree.
Got some questions voted by the audience. I think the topmost is, should STOs be minted and enabled on private or public blockchains?
Top one, yes. But I think on public blockchains, it depends, right? Public permission blockchains, probably more likely. Securities on a blockchain, the fact that they're securities, they'll be regulated, so that they need to be some form of management around it. So I'd say public permission is possible. And you're seeing a lot more work now go on the public permission blockchain.
The next topmost voted is regulation pulling back innovation in this space? And how can we balance risks and also innovation?
I think like different governments have been taking, but there's a variety of different attitudes to this, right? Actually, if you look at the space, I don't think governments have been too restrictive in terms of regulation. They haven't done huge clampdowns and stopped different companies from operating, right? And that is, but we need to fundamentally understand that governments are here to protect the country's economy, right? And they need to put in things to ensure that there's no huge crashes that happen that destabilizes the economy as well. So they have to take a delicate balance, right? And I think so far what they've been doing so far has been pretty accommodating already to the technology and in terms of encouraging innovation in the area.
So I won't talk about the Singapore regulator, but I'll come back to it. But I'll share some stories. I was in Luxembourg about a month ago, and we spent a lot of time with the local regulator to understand how they put their DLT securities laws together, right? And it's pretty interesting. Luxembourg is, basically the size of Singapore CBD. The walkable area in Luxembourg is basically that size. So the good thing about Luxembourg is that if you are, for example, a digital exchange, you can walk over to the regulator or at least meet them at the same bar for lunch. And they actually decided to phase their DLT securities laws. And the way they phased them was in response to actual commercial business cases. The first time they actually put the ability for securities to be recorded on ledger was 2013. They then waited about 5 or 6 years for the second part of that law to come into force, which was what are the kind of assets that can be opened into this? Can you add, for example, funds to come in? And recently they've added part 3, right? I'll go back to the John F. Kennedy saying, right? Ask not what America can do for you, what you can do for America. Sometimes we kind of have to ask ourselves that if we have things like Project Guardian, for example, how do we go and give the right commercial use case to deepen the market infrastructure so that we can help with the creation of this regulation, right? So to actually flip, I think it's our joint responsibility to do that. And when I think about, look, I'm a trained economist, so to me, everything is the invisible hand, right? Everything follows the invisible hand. And we have to come up with the right commercial case, right? For example, when you look at tokenization of real world assets, if you want to buy, securities linked to real estate flows, we have a great REITs market at the SGX, right? You should just go invest. And by the way, we do lots of $100 now, right? So I think the commercial case, the regulation to me in these kind of markets actually follows the commercial use case. What becomes important is the effective lobbying mechanism that allows all of us operators to tell the regulator, this is what we are looking for. Right? So I actually see it as a collaborative effort.
The next highest voted is...
Oh, sure. Great. Let's take that.
How does blockchain benefit other enterprises?
Sorry, there's a market note question. Can you take that one, please? Okay, great. Considering market notes ties to SGX and Temasek, how do you address concerns about potential conflicts of interest and monopolistic behavior? Yeah, really good question. One answer, regulation, the same way SGX does it. Very simple.
Okay, I guess it's not really a question for this panel, but blockchain can be applied in numerous different ways, right? So when I was in IBM, we did projects for trade, we did projects for food, tracing of food. There's all sorts of different applications and use cases. The biggest one is really traceability and provenance of all sorts of stuff, right? You can ship some goods from China to Singapore and trace all of that on blockchain. You can have a farm to grow mangoes and trace mangoes all the way to the factory, to the supermarket. That is one huge use case. And another big use case I see is also in terms of facilitating exchange of data and information, right? So beyond tokenization as well, right? How do we have a more agile way of sharing data across different entities, an agile and trusted way of sharing data across different entities, right? Right now, when you have you need to share data from one company to another, is usually like a dedicated integration that happens, and you do a lot of those, right? If you deal with a lot of different companies, blockchain potentially can be that kind of data exchange that allow you to kind of trust data that's being shared from one company to another, and to be able to use that data as well.
Let me add one, although it's come from financial sector, but I think you can get inspired by it, right? Let me give you an example of our own experience in 2016, where we used DLT to enhance resiliency. Let me explain to that. So BNY Mellon, we are the sole settlement and clearing agent for Fed eligible securities. This is one of the world's most liquid securities, right? So because of that, sort of the bar for resiliency is super high because of that, right? So essentially, the role we play is so important because it can impact the market when things not getting clear or settled. So we've done all the right thing that we need to do, active, BCP and all those kind of good stuff, all sort of layer of resiliency. But then we add on one more layer on top of it where we actually create almost a real-time shadow copy of all the stuff on DLT. And why is such a good idea? Because it's immutable. So that even just in case anything happened, despite of all the stuff that we put in, Fed can almost recreate the whole ledgers by just taking the whole DLT. Again, this is just to give you an example of DLT. I think the important thing is to understand what is so unique about blockchain, the immutability, the ability to program asset and stuff like that. There's just tons of creativity you can build on top of that. But I think the key thing is to understand why immutability matters, right? Why programmable matters, and so on and so forth.
I think the next question is my favorite. It says, liquidity is the key to adoption. But then there are already so many exchanges. There's so many tokenization platforms, which is already causing a lot of fractionalization. Like, I don't like FTX today, but there's so much fractionalization which is added because of that. So how do we get this fixed?
Just trade on AsiaNext. No, I think you're right, actually. I mean, the world is littered with failed exchanges, right? I mean, there's basically liquidity. Central liquidity is where so if each time you break up the liquidity pools, it makes it harder to trade. So I agree, right, that liquidity needs to be somewhat centralized if you're going to go for that model, right? How can it be fixed? I don't think someone's going to say, right, cut out half the exchanges. I think what will happen is liquidity will flow to venues which offer the most attractive place to trade, whether that is the price of the trade. Is it free to trade? Is it easy to trade on it? Can I get the leverage that I want? As an example, what is my initial margin to trade on derivative, for example? The cheaper ones will probably win because cost of capital is going up. As always in financial services, the market will decide, right, where liquidity will flow. And those who don't step up will eventually, and that process will come through. And you're already seeing, right, some of these, like particularly like retail exchanges in the crypto market, there's quite a few that have failed because liquidity has gone to certain venues. Like, everyone knows about how much liquidity in the crypto market is on Binance right now. Now that's not necessarily a good thing either, but there is starting to be concentration. But it's what we're trying to encourage is concentration in the safest place, right? So adding safety, and that for us, I think, is a factor that's really going to be playing out in 2023 in the future. Is that how do I trust this counterparty? You could possibly charge a premium per trade on the fact that you've got good trust built into your venue.
Another way to look at it is also kind of like when everyone is in the innovation mode on experimenting, fragmentation are sort of expected, right? But I think to both Neil and Rehan's point, at the end of the day, the viability, the commercial models, and this thing market forces will just, sort of streamline by nature. And that's what often we see in financial market.
Okay, so there's a question on, is Asia truly ahead in the digital asset space, and how are we doing compared to the rest of the world? I think we're ahead and behind. I think it's a two-tiered race. When you go to Europe, right, I had the pleasure of doing a 2.5-week trip in Europe recently. And if you think about the EU DLT pilot regime, which is the first time that Europe at a federated level has a DLT pilot regime across its geography, it's quite strange, right? Because Luxembourg has had its own digital securities regime. Germany has had it for a while. Italy has had it for a while. The UK hasn't. But it's quite interesting that it took them that long to actually start a federated digital regime in Europe. So what I tend to find in Europe is that there is the number of platforms and the use cases, at least in my part of the business, which is TradFi capital markets, is definitely ahead. They have regulation that supports and gives equivalence of ledger-based securities to paper assets. In that way, it is ahead, right? Where I think Singapore and some of these centers actually end up winning is that they're nimbler and they don't actually have to deal with the federated regime. And I'll try to answer another question in here, which is, aren't these assets meant to be global? In traditional capital markets, you have a concept of an issuer depository and an investor depository. And I'll give you a good example here. The future could very well be that an issuer comes to market now to digitize a bond, but guess what? They actually want to attract Swiss investors. So I pass it over to Neil, right? So I would say the way these platforms are shaping up, You can call it collaboration, you can call it co-opetition. We're definitely seeing that over here, right? And I think these sort of things tend to move a lot quicker in Asia. But in some ways, just to recap my answer, I would say Europe, just given the fact that it's so fragmented geographically, is definitely ahead on the innovation and regulation space. But I think we're ahead on the agility space.
So there's actually a question for Neil especially, and which is again highly voted. How does Asia Next balance attracting institutional investors while navigating crypto's decentralized ethos and evolving regulatory landscape?
Why do we attract institutional investors, or why will we attract institutional investors? I think it's because of governance, risk and compliance, and then our venue is fair, orderly and transparent, right? And that we work with existing technology which people already have in play. So like, connection via things like FIX and binary APIs. It's the language that banks understand it, and we can offer. The technology is evolving, right? But it doesn't handle volumes in a fast way, right? So if you want to do high frequency trading on a distributed at the moment, right, the technology is not there to support that. So you're not going to have microsecond trading on that. You can't run your algo. So centralized exchanges have a place in there. Where the decentralized ethos comes in is that, particularly when the asset sits in custody, right? So there's a lot of, I think there's a few custody providers here, to yourself, John, that we don't really want the asset to sit on exchange at all, right? So we want it to sit with custodians or custodian platforms and allow them to move the asset around in a decentralized way, interoperability between blockchains. What our role as an exchange is basically is to make sure, approve that transaction, to say, okay, A has sold to B, but why move the asset to the center if we can just give the authority for it to move between the two custodians? I think the decentralized model lends very well in that respect, and we're working on with custodians to say, okay, we don't want the asset to come to us. You just move it between you, but we'll tell you when that transaction has happened. So I think there's that kind of step between the two worlds where we say decentralized is good, and I'm a big advocate of decentralized, by the way. I mean, I'm a big fan of it. But right now, we put trust in the system. And then we can onboard clients in a way that makes sense. And plus, obviously, all the low latency stuff that I described earlier.
Before we conclude the panel for today, I would like to bring the attention back to the future. What does it really hold? What will drive the growth and the adoption of digital assets? And at the same time, what can some tech companies like ours and fintechs do to drive the adoption in the future?
You're Mr.
Well, I think we need to continue to embrace innovation, right? But the key thing here is that I think we all would agree that this is an industry effort. This is not a single party, right? This, regardless of your role, whether you are a market infrastructure provider, whether you are an investor, asset owners, or buy side, sell side, you name it. I think we all need to move together. And I think that commercial model is super, super important because, this bill is expensive, right? This bill is expensive. Just think about infrastructure bill, right? And then the third thing is educations, right? I think we need to continue to educate, how the industry is moving, where the regulator is maturing, how we can amplify success story, where especially when there is a right commercial model. And of course, I think with the likes of Julka, obviously, working together in the sense of, capability to accelerate some of the build that happening in the industry, sharing perspective. You work with a lot of different clients. You see more than sometimes that what we don't see, right? I think your perspective is valuable as well in terms of, from a talent, from capability, from enablers and stuff like that.
Well, I think it's a hugely exciting space. I hope it is, because I've just quit my really cushy job in the Swiss Stock Exchange to do this. So, no, I joking in part, but I really do feel that we're driving what the future will look like, because efficiency is there for the taking. I think the blockchain technology, the formation of digital assets, whether that be crypto, whether it be in STOs, whether it be on non-financial use cases, whatever that may be, this adds efficiency into the process. It offers so much more accessibility to investment, into creating new ways to conduct finance. So for me, we're sitting on the very, very early stages. We are really at the dawn, right, of this, and it requires participation from so many different people. I talked earlier about mass market adoption. That's when it will happen. And it will happen bit by bit, and there won't be a big bang event that we're all digital now. It'll just it's like digital TVs. Everyone just be we're going to move from analog over to. People just talk about TVs. You won't talk about securities in digital form. It'll just be a security, just the back end of it happen to be digital. The conversations like this will kind of be irrelevant in respect, because you will talk about what's the value of that security, what's the benefit of that security, and obviously digital format will drive the underlying benefit, but you don't, like, your end investor's not going to care. It's like, can I make more money from this? Or the bank's going, is it cheaper to issue, right? So, and those questions are, it is cheaper to issue, or it will be. So I think we're really exciting, and I'm looking forward to being part of that and moving it forward.
I think in terms of real mass adoption, there's really only one aspect that's important, and that's the user experience. If it's so hard to buy a fractional bond, then I won't buy it, right? But how do we get to that user experience is the real challenge, right? The crypto space and the blockchain space have been trying to improve the user experience for a decade now. We still haven't got past the need to protect your keys, and that is the biggest hurdle for mass adoption for cryptos, right? And it may be also similar for digital assets if we go the same direction. But if we go a more centralized way, then regulations have to come in to help protect people, etc. Right? So, but ultimately, if it comes to a point where you can take out your phone and buy trade different assets without thinking about it that much, right? And it's part of your everyday life. That's when we get the mass adoption to happen. And without the user experience, that's not going to happen.
You've all taken my points. I don't quite know what to say. Okay, so I'll echo everyone's points. And maybe as opposed to talking about the future, I would just say what we need to do to be ready for the future, right? And I remember listening to who's a Zoom founder, Eric Yuan, listening to his podcast in 2018, right, where he was talking about, he came from Cisco WebEx. I hope there's no one from Cisco here. And he was talking about, again, what Ernie was saying, that he just found the entire user experience so arcane. He felt he had the right UX people, he had the right designers to really, really improve that. I disagree with Neil a little bit. I think typically these kind of changes, there's usually some sort of a seismic event that leads to a mass adoption. And for something like Zoom, that would have been a COVID. But what did the Zoom CEO, Eric, have to do over the 2017 to 2020 period? He had to get ready. That's the nuts and bolts of, dialing for dollars, getting your name out there, doing podcasts every week, making sure your product is just better than what people are used to. And post-COVID, he'd really upped the bar. And today I was actually using WebEx. It's quite pleasant. And now they've got speech recognition in there. What I'm getting towards is that as we ready the infrastructure that all of us are building, right? We're actually hoping, and it's most likely that the incumbents are going to up their game as well. That is when the mass adoption comes in.
Just think about, for us, 44 trillion asset under custody, right? Essentially, asset is an asset. Some form of that will be in the future in the form of digital asset. I don't think it's a choice. We need to be ready for that. When we are going to be arrive, I think all of us are driving towards that. But I think for us, we need to do that because we need to be playing that role, because we are in the business of safekeeping in that custody construct, right? Whether it's a traditional or digital. So the good news is that you have a lot of people who are very passionate, committed, and have experience, right? We all come from, and the effort is already happening. It's just that, the future is exciting. It's just that we need to stay coordinated and as much as possible, how we can reduce the fragmentations here. But I don't think it's a little bit of a choice thing, because we are taking a risk on behalf of our clients because we think that's the right thing to do.
That's great. So that gives me a lot of hope that we are in the right place and doing the right thing, and the future looks great. So thank you for sharing that thought and leaving us with that thought. And thank you for the time. It's a pleasure having you here.